Hello, traders. Welcome to the live webinar. Thank you for joining. My name is Chris Svorcik from Elite Currency. And well, all the best for a new year. 2024, of course, is now here. So, wish you all great trading for the upcoming 12 months. And I hope you had a good 2023. We already discussed our results in the last video and pretty happy with those. I'll just review them at the end of the webinar quickly what those were. Above all, I hope you had some time to take the moment, seize the moment to relax maybe a little bit from trading because it's can be very intensive throughout the year. And I think end of December, beginning January is a good moment to focus on other things, get some balance and rest, because that's what we did, at least because the trading is typically not that interesting anyhow. So we took a break here in the Austrian Alps at this moment, enjoying the mountains and the countryside, the snow. So our toddler is having a great time. And after that, we'll take a tour to Prague and then go back home to Italy. So, that's a good way to, I think, enjoy the calmer moments in the market. And I personally will be back in trading end of this month, going back full steam again, looking at the markets. But that said, I did have time to take a look at some of the key pairs and instruments, okay, and did some technical analysis on those. Some Forex pairs, Bitcoin, and the US30. So we're going to take a look at that, first of all. We're going to review those 2023 results we had, and then we're going to explain how to join our flagship managed accounts through Elite Currency. So buckle up. All right, let's get started with taking a look at the charts. All right, your dollar, about plus minus 2 weeks ago, I was indicating that price has to break resistance or support for a clear move, either up or down. And well, at this moment, price challenged that resistance trend line. But if you look at how it made the push up, it didn't look that convincing with a wick on the weekly candle, indicating hesitation, exhaustion, weakness in general. And then a downside candle here, bearish candle, testing the 21 EMA, and it's slightly bouncing off the 21 EMA. So I personally think that price is looking at a bearish structure because of several elements. First of all, we have a potential head and shoulders pattern. Looking at the red boxes, we see a left shoulder here, we see the head, and we see a right shoulder potentially emerging right now. So price is testing the resistance of the left shoulder, in fact, and it's right in that zone. And that weekly candle weakness could be because of that resistance. Second, we see a very strong push down, impulsive, momentum, clear. Clearly, all these candles are almost all are bearish. I think, well, actually, they are all bearish, and they made a good steep move down of several hundred pips. I think maybe even up to 800, and did it in quite a relatively short period of time. Okay, now the climb up is not bad, but it's still a little bit choppier, a little bit more corrective than the move down. So I think that this is looking like an ABC pattern indicated in pink. A was the move down, B is the move up, and C is the move down. And this could be an ABC zigzag corrective pattern that could take price down to the minus 272 target or the minus 61.8 target at around 102.50 or 100, if I read these numbers correctly, around parity. And that's where a bullish bounce, indicated by those blue arrows, could take place. Now, the confirmation of that could be candlestick patterns on lower time frames around this head and shoulders area. That could be an early entry potential if the confirmation is given on a daily chart, maybe, for instance. Or on a weekly chart, if there is a strong weekly candle breaking through the green and closing below the green trend line, that could be another confirmation. Or the break below the 21 EMA low and followed maybe by a pullback and a continuation break on the daily chart could be another way of price moving to the downside. Okay, so that could be all kind of confirmations of price making the wave C and bouncing off the resistance and continuing that correction. Now that bounce up from the blue arrows, it could go way further than that. I'm just indicating that this is the bouncing spot. How far this blue arrow could go, it might be much further. This is just an indication of a bounce. It's not the end target necessarily. It could go all the way up to here, in fact, because I do expect a bigger pattern to play to the upside. However, this is something we'll review later on. And doesn't make much sense to talk about now, but I do expect that price will not only bounce here, but go all the way eventually up to these targets. Now, if price were to break above the orange trend line, make a correction, then the dotted green lines indicate a what-if scenario. What if I'm wrong? And that would invalidate my current analysis, and then that would probably indicate that a bullish breakout is taking place right now. Okay, so that's something to keep in mind as well. All right, so I think that's it from a euro-dollar perspective, and the target could be all the way up at 117.50 and 120. All right, now pound technicals, I think will follow the euro-dollar. I think we're looking at a momentum up. We're looking at 5 to 6 candles, not breaking that high. So that means that this green arrow, this price swing seems completed for the moment. This momentum up is probably finished. And we're looking at a correction lower. And we're looking at an ABC indicated by pink. The momentum up is one factor. The fact that we haven't made a higher high in the meantime in 5 to 6 months, actually, excuse me, this is a monthly chart. The euro-dollar, in fact, was a weekly chart. Apologies, I have still a small cold, so I might need to cough once in a while. But the pound is a monthly chart, and so 5 to 6 months now. No, actually, yeah, this is the 6th month, January 2024. So if this month fails to break that high, I think we're looking at a bigger ABC down. And I think we're going to look at an inverted head and shoulders with the blue box indicating the left shoulder, the head, and the right shoulder potential at the 61.8 fib. You can see price already respected the 38.2 fib here at wave A. And I would expect wave B and then down C to go to that 61.8 fib, the golden ratio, and then bounce up towards the minus 272 target and the previous highs up in here at around 140. All right. Now, what if? Well, what if, of course, if this month were to push above last month's high, then might need to be careful for, in my view, with shorts. It still could be bearish, by the way. It depends a little bit on how this month's monthly candle closes. If there's a big wick, you know, if the high breaches the previous top, but there's a huge wick at the top, well, then that still looks bearish in my eyes. So it depends a little bit on the kind of close. If it drops fast, but it doesn't make a strong bounce, and then going sideways, well, then there might be more downside potential. Okay, so you know, this is the current path of least resistance. And of course, if it does make the downside, I would wait for some candlestick patterns to confirm the end of wave C at the 61.8 fib. Maybe I could even take a small position anticipating a bounce at the 61.8 fib, but I wouldn't take too much risk because, of course, it's, in my view, less risky to wait for some kind of price action candlestick confirmation. And then it depends, how will price respond to that fib? Will it be impulsive up? Will it go sideways? That will give me more information if this wave C is indeed finished, or is it not yet completed and will it go deeper? Or is it maybe not an ABC, but a wave 1, 2, 3 to the downside? So these are all factors to keep in mind with the pound dollar. But at this moment, I'm expecting the red arrow down and then blue arrows up. It's my best estimate at this moment. But the further down the road we look, of course, the more difficult it is to make these guesstimates. That's why I always use chart wave patterns in combination with technical and price action tools to confirm my trading ideas. All right. So regarding the dollar yen, huge upside. This is a weekly chart. Now, for those that might remember, on the monthly chart, we had a huge move up prior to 2020 or 2017, in fact, bringing it from a 75 area to about 120 or so off the top of my head. Then we had this correction here on the left. And then a new upside emerged in the recent years with an impulse of 1, 2, 3. A wave, a bearish wave that took price back and bounced at the 50 fib. You can see how precise the reaction was at the 50 fib. I mean, almost perfectly at the 50 fib bounce. Then a retest of the previous top, and there again a bounce. So my best estimate is a wave 3, which was completed with this impulsive move between 2020 and 2022. Then a bearish impulse for wave a bullish wave B correction, and now I expect a wave C, back down to the 50 fib, either just a little bit above the 50 fib or at or below the 50 fib, and then again a bullish bounce, because I would expect the pink ABC to complete the wave 4, and then the start of the wave 5, indicated by the blue arrow, to break the previous highs and make a higher high. This analysis would be invalidated if price were to go below the top of wave 1 all the way here, and if it breaks below the 61.8 fib, in that case the wave 4 is less likely. Not invalidated, but less likely. Okay. Good. So I think that's all I have to mention at this moment. If price moves up, I'm looking for a bearish reaction at the previous highs, maybe just below these wicks here that could already be resistance, and a bounce from that spot. All right. Now Bitcoin, BTC versus the USD. We had an uptrend, of course, back in 2017, three-wave correction. Price bouncing here at the 61.8 fib resistance, then at the 78.6 fib support, plus minus, if I remember correctly. A huge uptrend, followed by a sell-off, a last push, higher high, but with exhaustion, with the uptrend running out of steam. Higher high just barely making a new high, and then a pretty strong correction. And it looks like an ABC correction, ABC zigzag. I think this is an ABC zigzag of a larger complex correction. I would expect this an ABC to be part of a W. Hence, I think that this is an ABC up for wave X, and I think there could be another ABC down for wave Y. Now, how far this ABC up will go, I think that it's running into very sturdy resistance at the 61.8 fib and the 50,000 psychological round number. I personally am very skeptical it would be able to break above it. I mean, you never know, but I mean, the odds are against it in my view, to be honest. I would give it 80-20 that it doesn't work, or maybe even 90-10 if I'm more bold. Seems like a bouncing spot to me, but price is not showing that as yet. I see strong weekly candle so far. It's in a bullish momentum. There's no hint of time or price indication that price is yet responding to this. So time will tell in the next weeks. We'll have a new webinar on the 1st of February, Thursday. So we'll probably know a little bit more about whether this was indeed the reaction spot that I anticipate or not. If yes, I would expect a move down, a correction up, and then a move down again. And how deep this could go? Well, I think it could go to the 21 EMA, just below the 20 EMA low, then make a bounce up. How big this bounce up could go, I'm not sure, but I think 61.78. I think a pretty deep correction is possible, followed by a down move again. This down move could go deeper. I mean, I see support levels here. I see support levels with these candles, the start of the impulse. I see previous bottoms. So it could easily stop at 25, 27.5, 30-ish thousand, and then begin an uptrend. It's possible. Or it might even go lower and go to the 78.6 fib maybe. If I put a fib from here to here, which I would guesstimate, I don't have that fib, around 22.5 or 20K maybe. But this zone at this moment seems pretty strong. I would think that might be the main end target for the bearish correction. And at that point, I do think a new uptrend is possible. And that new uptrend could challenge the previous top. And if it is really an uptrend, should break it. So let's see what is possible in this year and even perhaps next year, because this is looking at a weekly chart. So that's my 2 cents at this moment. And then last but not least, the US30, Dow Jones Index, US30, is showing, in my view, had an uptrend prior to this, then a correction. And now is again, so this correction here is leg one, that could be a W or wave A. And now it looks like an ABC up, which is part of a wave B or X, and I would expect price to hit resistance and move down again for another leg of bearish correction. So in my view, this uptrend is not an uptrend. It is a corrective pattern. Time will tell if I'm correct or not, but that's just how I see it, based on wave patterns, chart patterns, and of course looking at these charts for 15 years now. And it doesn't mean I'm always right, certainly not, but this is my best estimate at this moment. And I think that there's a high chance that this is a wave 1, 2, 3 impulsive pink, and that it could be a corrective bull flag wave 4 to the 23.6 fib, followed by a choppy wave 5, maybe a rising wedge pattern, followed by an impulsive move down, correction, and then more downside. This corrective idea remains valid as long as price, I think, stays below the 40,000 psychological round level. If it were to break above that, then I would have to throw my analysis out of the window and review the charts again and think what could be going on. It's probably something else than I think at this moment. And that would be a red line in my analysis and would indicate that I'm wrong in some ways. We'd have to rethink and relook what's going on, and we would give an update on that later on. So 40,000 is quite important at this moment. All right, so that's it regarding the charts. Just a quick recap of our 2023 performance. I already indicated that in the last video, but just in case you missed that perhaps, we had these results in the entire year, a trading year of 2023. Flagship gave almost 81%, which is almost 7% per month. ZUCA about 12%, which is about almost 2.5% per month because we started in August. Excuse me. Athena EA almost 35%, which is almost 3% per month. Cronus almost the same, but since June, so average per month is more than 4%. And ECS Signals was the only one in negative territory. So as you can see, by far, the flagship had the best results. Also has typically the lowest drawdown and the lowest risk. So I think it's the most interesting option, but it doesn't mean that Sucia, Athenia, and Corona CA are not interesting. I think a right mix, right portfolio balance reduces the overall risk in general. So I think that's how I approach it, at least. And that's what typically investors do with stocks too, for instance, right? Usually don't only trade one stock. So it's good to keep in mind the various options, at least within the currency. And we have these four at this moment. Flagship, though, I think is very interesting because it has had a 4-year live track record of trading where most months are positive. We had only 1 month a year negative in those 4 years, with the worst month being just a couple of percent loss. And the drawdown typically not more than 10%, as you can see in this MyFX book screenshot. Drawdown, it was 10%. The monthly gain about 5.5%, a bit more. And yeah, a very good result here in that year of 92% with this particular account. This is in 2023 only. Look, January to December, 10% drawdown, 5.56% per month average, and a 92.37%. So this particular account offered more return than the flagship plus 81%, because we have multiple accounts. So one account was a little bit more, one account was a little bit less, and this 80% was the average. And that's because I'm trading with about €500,000. So yeah, that's a big sum. So I spread the risk with that capital, and I traded with multiple brokers. And of course, Nikita's trading also. In the meantime, I would have to check exactly, but I think at least with 100,000. So slowly but surely, we're getting to that 1 million mark. So that's exciting. And we have now MAMs as well available for trading, which means managed accounts, which means that traders can join a broker, 2 different brokers, and we'll manage that account on your behalf. You have to sign the risk disclaimers and stuff like that, set up the account as usual with that particular broker, join our MAM, and that's it. Just watch us trade that account. Flagship, once again, 4+ years of trading, few losing months, only 4 in those 4 years, 1 per year, small losses in general, low drawdown, low risk, and we have a great members area where you can track everything regarding stats, regarding the investments. And if you want to join, the best is just to write us an email at info@elitecurrency.com, and we'll walk you and talk you through that process. It might seem complicated. It's not really that bad. Just need to start up. Main thing is to open an account with the brokers that we have available. With this MAM, we have 2, so you can choose or do both. And we'll lead you through that. It's really not that bad. And once you start it, then it's just a question of monitoring. I mean, just keeping an eye on the results as you want, but we will be actively trading. Elite Currency will be actively trading at that managed account. Okay. So once again, write this. It's info@elitecurrency.com. We've started in, I think, beginning 2020 with trading managed accounts as Elite Currency entity. So that is now 2020, 2021, 2022, 4 years. At the beginning, we had our fair share of ups and downs. We had a great start, then we had a year of downs, and I think we've really learned from that process. We've lost money in that particular drawdown, in that learning curve as well, with systems that were not ready yet. They were ready, but they were not. They were not trading long enough in a sense that we have now a higher bar of what we want to see in our systems. So we learned from that process as well, how to trade ourselves in a better way. And I think that at the beginning, we made some great profits with systems that just didn't last long enough in their structure, in their approach to the market, and they were more vulnerable for shorter term trends. And then we had a drawdown. We still, in a way, ended up in positive. If you look at the entire track length of the system that we started with, but for traders that joined later and didn't, participate in the beginning with the profits, of course, they saw more drawdowns than the profits at the beginning. So now it's more robust, it's more consistent. The drawdowns are lower, the risk is less. I think it's much more balanced. We have a 4-year track record of live trading, so I think we really got to a spot where I'm very, I feel very happy. I feel very good about this, and of course we keep monitoring the market. We keep our trading tight with short trades, with short small losses, and I think that trading history does not give a guarantee, and it never will, of the future. But let me say it this way: I feel confident to make that investment that I'm doing. It's a risk that I can accept, considering the track record that I have seen with Flagship. Okay, so let me formulate it that way. All right, so that wraps it up. You can track us on my FX book. We're all about transparency and sharing results. So you can find that there. Just pause the video if you want and take a look. And we also share our missers, strategies that didn't work out, not only the good ones. Okay, so thanks for viewing. Reach out to us with any questions. If you're not sure about any of these systems or Flagship, feel free to reach out and ask some questions through email as well, or the next webinar. And wish you all great trading in 2024. And we'll see you on that 1st of February, Thursday, with an update on the trading in January. I suspect it'll be a little bit slower than other months typically is, because of the beginning of the year is just slower. But we'll still give you an update on the results. And